Thank you everyone for being here at the CNBC Digital Finance Forum. First, I want to kick off with a question. I want to see a show of hands. How many of you have ever been frustrated with your banking experience? I expect every single hand. If the hand is not up, you're a banker. So we trust banks to hold our money, but too often they make moving money way harder than it actually needs to be. And the reality is it's not really the bank's fault. It's because the infrastructure underneath the banks was built in the 1970s. SWIFT, which powers global payments, came out in 1977. All of this infrastructure for moving money around predates the internet economy. So what we're living through right now is an upgrade of the infrastructure. Crypto and blockchain make this upgrade possible. So we're moving through a moment where money is going to be like software. And when money becomes software, the question is, does money move when and people actually are able to use it? So let me show you what I mean. So if we think about you're a CFO, you're sitting at your desk, and you need to move money into all these different corridors. You're needing to meet payroll. So think you're in New York, you need to move money to Sao Paulo, you need to move money to Singapore, you're calling up banks, you're navigating multiple time zones, you're paying these FX spreads, you're hoping that the compliance department doesn't freeze the transaction. It's nerve-wracking. And if you're living in Argentina, you experience every day hyperinflation in your local currency. Holding US dollars, if you actually want to convert from peso to US dollars, you're getting a very high tax. And the reality is both of these are not separate problems. They're actually the same problem. Money doesn't move at the speed of the internet. So we now have this alternative. As long as you have access to the internet, you can spin up a cryptocurrency wallet anywhere, receive dollar-backed stablecoins in seconds at almost no cost. Stablecoins today move trillions of dollars of value globally. And we're going from percentage points now to a few basis points. We're going from days now to a few seconds. Stablecoins already move more money than Visa and MasterCard combined. So this is no longer just an experiment. The system is already working, and it's at time. It's time for prime time. It's at scale. And so infrastructure alone isn't just going to win. You really need to build an operating system. So when we think about this, we need a unified operating system for money. You need a single layer that connects how money enters, how it's represented, how it's exchanged, and how it's spent. And there are really just four pillars to the system. So the first is funding. People and businesses aren't just going to live in the fiat world or just the crypto world. They need to go from traditional payment methods. They're going to need to go from their debit card, their Apple Pay, their PayPal, their Venmo, all these localized fiat payment methods. But they're also going to need to pull from crypto native sources now. They need to pull from crypto exchanges and crypto wallets. And it needs to be completely seamless. You need to be able to go from fiat to crypto, from crypto back to fiat without any friction. And that is our core business at MoonPay. To date, we've processed millions of transactions. We've moved over $10 billion of value across 160 countries, and we continue to scale our infrastructure. The second very important pillar is tokenization. Tokenization is what turning any asset now into software. Dollars are the first example. Dollars have now become stablecoins, but it doesn't stop there. We're going to see treasuries, we're going to see commodities, we're going to see stocks, we're going to see credit, we're going to see real estate. The entire asset universe is moving on chain. We already have seen pretty important progress, but only 1% of the US dollar supply is now in stablecoins. If we look at the league table of real-world assets, the leading asset class outside of tokenized treasuries, which is sitting roughly around $10 billion, is tokenized gold, which is literally just a drop in the ocean relative to the overall capital market. So what it tells you is really just two things. First, we're very early. Second, the opportunity is massive. And we're seeing entirely new assets emerge. We're seeing things like prediction markets. We're seeing things like perpetual futures. We're seeing real-time borrowing and lending coming on chain. These are products that never existed before. The third pillar of the operating system is exchange. Once assets come on chain, you need to seamlessly be able to trade and swap them, irrespective of the blockchain, and we need to lose the complexity of things like network fees, gas. It just needs to work. And AI agents are going to make all this happen beautifully. Execution will happen automatically. It will optimize for speed. It'll optimize for cost and reliability in the background. Crypto will become the de facto currency for the AI revolution. The last pillar is spending. At the end of the day, money has to move in the real world. So every business today is not set up to receive crypto payments. So that's why we're seeing things like stablecoin linked cards absolutely surge, because they're bridging the system until wallets, QR codes, and tap to pay become the future of acceptance at checkout. So when you zoom out, all 4 pillars will only work if we solve for regulation. An operating system for money cannot be built under uncertainty. That's why things like the Genius Act really matter. That's why the Clarity Act matters. Clear rules protect consumers and give institutions the confidence to build. So here's where we are. The infrastructure is ready. The demand is here. The regulatory framework is taking shape. Now the race is about execution. At MoonPay, we're building the operating system for modern money movement. We want one unified layer for funding, tokenization, exchange, and spending. And when money finally moves like software, people aren't going to remember the old system. They'll just wonder one thing: why did it take so long? Thanks, everybody.